everyone, Osbrah here for CFT, and as usual, we're gonna talk about a few topics. We're gonna have the summary of what happened the previous days, most likely the previous weekly session, and then we'll have expectations regarding the days to come, regarding the macroeconomy, the geopolitics, and of course the technical analysis. So we're gonna start with the topic for this edition. We're gonna talk about Black Friday for the crypto market. So the dump that we had on the night from Thursday to Friday, and that extended through the whole Friday session. Then we had, of course, the technical pump, the technical bounce during the weekend. So let's see how the market are going to react to this. Then obviously we're going to talk about indices, about S&P, especially as it's doing something very interesting right now. Also, we can't have an edition without talking about the commodities. Is it the end of the cycle? Really? Has the bubble bursted or not? Or is there still like an opportunity to catch on the especially on the metals, on gold and silver? Also, we have to talk about Japan, about what happened today. So Sanae Takaishi won the election with her party, the LDP. So, is there an opportunity to play in the Japanese market? We're going to talk about it briefly as well, and then of course the usual technical analysis with a focus on Bitcoin and S&P. So regarding the Black Friday, I think you have noticed we had a massive dump. So as I said, going from Wednesday to Friday, right? Extended to Friday. Then we started to have a bounce over the weekend. So basically, after the earnings, so we had earnings the last week, important ones with Google, Microsoft, for example. And something that we noticed was a high expenses on the AI, especially, but the revenues were not following. So investors are finishing that because they are showing that they're worried about the future regarding the companies that are concerned. So basically, we entered in a risk-off environment, and lately crypto suffered a lot when the market was uncertain. That was the first market to be dumped. Of course, S&P was dumped as well, equities as well. We had a crash on Nvidia, on Google, on Amazon, but crypto suffered the most as usual, and Bitcoin went from 75 to 60,000. We even went below 60,000, and ETH went from 3,000 10 days ago to 1,700, which is absolutely crazy. So for now, the market is safe as long as we can hold around 70k. I would say this is a short-term support. The most important, obviously, on high time frame is to hold 60k. But if bulls want to be back on track, in my opinion, they need to reclaim at the very least 75, 78, even 80k. But we're going to talk about that a bit later. So regarding the equities market, as I said, we had a capex wall. So as written, the contagion also reached the traditional finance. S&P and Nasdaq had some scares before limiting the damage at the close. We're going to talk about this in the charts. As you can see here, this is the Google capex, right? So as you see, we had a massive increase. However, the revenues didn't really follow up. And this is why the investors were quite worried about the future, and obviously reflected it in the market at the end of the session. Regarding the commodities, so we talked about it in depth during the last weekly outlook, and I also released an article dedicated to commodities, so I'm not going to go too much into the details. However, I want to nuance things a little bit. A lot of people talked about a bubble that bursted, about a cycle top, about the end of the rally. However, as you can see here, despite the volatility, the yellow metal is holding firm around $5,000. We need to zoom out. We were at 5,000.5 3 weeks ago. So a 10% consolidation after a parabolic rally is technically healthy, not alarming. On the silver side, it's a bit different. Silver suffered a bit more with a massive dump, also due to the CME change regarding the margin rules, and now it's struggling to reclaim $80. But same, remember that it was trading at $30 just a few months ago, and now it's around 75, 77. As you can see just here, this is also the performance of gold compared to S&P 500, which is the black line, and Bitcoin, which is the green line, during the last 3 months, so from November to February. And as you can see, gold is still absolutely king performance-wise, right? So now the thing that we want to monitor as traders and investors is the upcoming inauguration of Kevin Walsh as the head of the Federal Reserve. So Trump nominated its new chairman, its new Fed chairman that will replace Jerome Powell in May, because Powell's mandate is going to come to an end. So Kevin Walsh is going to be the one that will replace him. And as we know, Kevin Walsh is in favor of a strong dollar. It's quite hawkish. This is also when he was nominated, the market tanked a bit because everyone was quite surprised, especially after Trump said that he wanted rates to be extremely low to bolster the economy. Then we have to talk about Japan. I said this is the major news of this Sunday. The landslide victory of Sanare Takaishi, the snap election lifted major uncertainty and offers economic visibility through 2028, at least until we have the upper chamber elections. The election we had today was for the lower chamber, and in 2028 we will have upper room, the upper chamber in the parliament. I'm not going too much into the details, but basically this is a massive win that will ensure Takaishi to have full power until 2028 at least. And it's quite bullish for Japan, I would say, because Takaishi is a disciple of aggressive fiscal stimulus, and she is definitely following Shinzo Abe monetary and economic policy. This is why we talk about Abenomics. She is the heir to the Abenomics, and the potential impacts obviously will be on Forex. The ultra accommodative monetary program and fiscal spending should continue to weaken the yen. It has pros and cons. This is excellent news for Japanese exporters. However, be careful, as this could force intervention from the Ministry of Finance. We had talks about intervention a few weeks ago, and you saw the dollar absolutely nuking, especially against the Japanese yen. So you want to be careful that they do the same thing again to prevent the yen to tank too much. So we are yet to assess the market reaction, as the last intervention had the opposite effects. As I said, weakening pairs such as USD and Euro against GPY, so that could be the surprise, as things couldn't go as expected, and the yen might stay resilient. Also, about the opportunities that it offers, Sanae Takaishi is known for a stance on geopolitics and national security, so potentially betting on stocks related to the defense and military industry could be a good idea if you guys are into the Japanese market, if you guys are monitoring the Japanese stock market. So look at the defense and heavy industry sectors. It could be a good bet for the next few weeks, or even next few months, maybe even next few years if we play it onto 2020. Now regarding the technical analysis, we're going to talk about Bitcoin. I said here we have the important support, the major one at 60,000. This is the glass floor tested during the crash, and it must hold at all costs. Also, we have the major resistance, as I said, at 76,000. This is the former support that has now turned into a resistance. And in my opinion, as long as the price trades below this level, sellers remain in control. So it's imperative for the bulls to break this wall and reclaim that level and then reverse the structure. If you look here, for now it's quite fine. We are staying above the point of control that we have here, and the level to break is this one. So for now, as you can see, we stay in a bearish structure as we are failing to make a new high just here. So that low must hold if bulls want to have a shot in the next few days. Obviously, we're gonna talk about S&P as well. So we said back to square one because it's back in the middle of its previous range. We thought that it would break down from the range low here, but in fact it was just a deviation. So now it's back to a neutral zone. Personally, I wouldn't play here. I would wait for the extremities to be tested, and we're talking obviously about 6800 to 6850 regarding the support level. That would be the buy zone, and the resistance obviously 70 69 75. Sorry, this is the profit taking zone for buyers, for people who bought during the Friday rip, or it could be also a short opportunity, as it's the main resistance for now. As you can see on the chart just here, it's quite obvious. Resistance, resistance, resistance again. So now pushing. We had a very nice recovery on S&P, by the way. I want to see the reaction around here once we feel the imbalance that we have, and once we retest the range high slash bearish order block just here, right? So mark these levels. And to conclude that little video, I would say that yeah, volatility is back, and the easy buy and hold, unfortunately, is over for now. Next week will be dictated by Bitcoin's ability to hold 70k, as written in the article that I posted earlier today, and the Asian market's reaction to the Japanese election, but also the US. So until next week and until next article and video, please guys have a great trading week. Take care, stay safe, don't do anything crazy, and stay sharp. See you next week, guys. Cheers.